All right. So let's go ahead and get this started. Welcome. Welcome. I appreciate everyone that is tapping in with us right now. And welcome to Mindset. This is where we get back to zero to the best of our ability because the market can shake you up quite a bit. Let me make sure okay, that one's muted. All right, good. All right, so Mindset Reset. Wednesday wisdom for weekend wins to refuel your fire and reignite your passion. All right. So today's topic is going to be a lot of fun. I think a lot of people kind of get wrapped up because especially we kind of talked about this on our Saturday private mindset that we do on Saturday at 10 a.m. But I'm bringing it back to this one because I think this one's probably going to really hone in to what we've talked about. So we're going to go ahead and try not to major too much into the minor things, but we're going to major on the minor things. So I did 2 variations on Saturday. So this one's going to be like more impactful so we can look at the details so that way we can get to where we should be as traders. And plus, there's going to be a little bit of an intro of what I'm working on trying to identify trader identity and help people kind of steer themselves along that way. So, all right. So I want you to like try your best. Like today was probably one of the more quirkier days, right? Because there was a lot of consolidation, but because we understood market climate, and we've talked about this in other mindset classes before, we knew what was coming up. There was the Fed rate decision. There was a lot of economic data that was coming in, and then also Jay Powell was going to go ahead and talk on stage. So we already know that the market's climate was going to be a little bit crazy along the way. So if you were very strategic, you could be able to, sit out of certain areas. If you don't do well in consolidation, today it consolidated. If you do better or don't do well in breakouts, okay, there was some good areas of consolidation. So there was so many different things that could have happened in the market. But I want you to eliminate as much minor distractions and minor things that does not help you as traders. And that's what we're going to go ahead and focus on. So that way you can major on the minor things that makes you a good trader. All right. So let's go to the next one. So misplaced energy. All right. I think a lot of traders, I face it too. And a lot of the stuff that I do on mindset is a reflection of things that I face. Because I feel like as a trader, it's good to hear from a trader how traders react to certain things. And I try to be as transparent as possible and a little bit of empathy so that way I can be able to relate in some ways. But misplaced energy is probably the biggest thing that we apply when it comes down to trading, because we're supposed to be completely objective. We're going into the market. This is my trading plan. This is my strategy. This is how it's done. I've journaled it 1,000 times. I've back tested it 1,000 times, and I'm supposed to just execute the moment that the setup shows itself, right? But we really get wrapped up on everything that happens outside of trading, and it really kind of pulls us left and right or whatever the case may be. And for example, if you didn't really understand the market climate that was going to happen, especially with so much economic data that was coming in, you would feel like, yo, my setup doesn't work, the strategy doesn't work, and then now you're tossing a whole strategy out the window because you think the strategy doesn't work, but it just was not ready for that type of climate. And the market does operate in a sense of timing to a certain degree. So I'm gonna leave you with this quote. I've given this to you before. Eric Thomas says, "You are the executive director and the screenwriter of your life." So how are you placing that energy? What, like I was talking to my wife earlier this week, and I was like, "Hey, give me like a list of things because I want to kind of like really write schedules." Like one of the things that I don't like as an individual, and if you want to, you could chime in, put a 1 in the chat if you do agree with this. But I'm a type of person that I don't like things that don't go to plan. So I have a hard time planning things. And if you've ever faced that type of situation, you could go ahead and put them on in the chat. But I like things to be in order. I do, but I don't like to plan things and it doesn't go according to plan. I'm very rigid. I'm very systematic. I'm very like I'll be in a different type of mindset because it's not doing exactly what I expected. And it's really hard as a trader because you remember when we kind of did the mindset on the art, right? The market is a creative space, right? How you draw your trend line is very subjective. If Da Vinci draws something and he's like, I don't like it, he's not throwing the whole painting and the canvas away. He's turning around and be like, okay, how can I turn this positive? All right, let me just add another shade here. Nothing is exactly perfect. And in an imperfect market, I'm over here trying to force my rigidity inside of the market. So you are the executive director of your life. So you got to be able to plan out. If you are a person that procrastinates and you don't plot out your levels, the market can take advantage of you, especially if you don't know what levels the market tends to react on or supports or bounces off of, and you could cost yourself a lot of money. So I want you to spend a lot of energy. If you feel like you misplaced some energy, or you feel like you could apply better energy into your trading plan, trading journey, or even trading aspect, maybe it's a strategy that you've been forcing to use and it just has not yielded the results because you haven't back test. You have to place energy in the back test so that way you can know if it fits that market or fits that ticker, because you cannot take a strategy that works for Tesla and just put it on everything like AMD and everything else. The market reacts because there's different players that plays different tickers. So it's very important that you take your misplaced energy, get them organized, and place the energy where it's going to make you effective as a trader. All right, let's go to the next slide. All right, so the next slide we're going to talk about is trader's mind. This one's going to be a little bit detailed because, like I said, there's going to be an intro to something that I'm working on. I want to not really pinpoint, but I want to help people try to figure out what is your trader's identity. I'm working on the whole entire mindset curriculum, everything else, so stay tuned with that. But I want you to really think of probably one of most of the three common things when you talk about traders. There is swing traders. Swing traders tend to, when it's all said and done, they don't want to, get into a trade for like 30 seconds and then get back out. They're not doing the whole double Dutch thing. They're very methodical, they're strategic, they look for a setup, and they have their stop loss at a certain point, and they anticipate that it's going to be profitable over time. So a swing trader allows for it to swing. It could be day swing, it could be a weekly swing or a longer term swing. But those are the type of people that actually exist in the market. You're playing against those. Another one that you're playing against is the investors. So you got, hedge fund managers, banks, everything else. They're literally buying up the dip on very key things, and they wait for markets to kind of come down. So while you're probably trying to swing trade a particular ticker, let's take Tesla for example, and Tesla is dropping right now. There are investors that's probably doing dollar cost averaging, knowing that they're going to hold on to Tesla because they have a different time horizon than you do. But if you're a person that, you're retiring in 10 years, you probably wouldn't invest into a Tesla, and you'll probably be better off swing trading it when it's all said and done. And then the other one is my favorite. Everybody knows who I am. I'm a scalper. Scalpers are the ones that are mostly the day traders. We're the ones that kind of move through the market and just take the opportunities by, shaving a little off the top, right? Scalping, right? So we take those opportunities. So I want you to understand the trader's mind. And mind you, there's so many different combinations mixed in, this, that, third. There might be a scalper that's a day swinger. And we're not going to get into that. I just want to talk about those three bases. And I think those are the fundamental sides that kind of really tone in what type of trader that you are. All right, let's go ahead and get to it. So let's talk about the trader's mind, right? We're talking about investors. Who are they? All right. These people, they do not care that Jay Powell is talking. If anything, they're like, wait, did it dip? Okay, cool. I'm just gonna go ahead and buy another share, buy another 2 shares, 3 shares, depending on what their portfolio size is, right? So they understand that there's a bigger economic background. There's a fundamental aspect. They're looking at earnings reports, they're digging deep, they really are trying to hone in what they're investing. We've talked about this in cheat code, where we kind of ask, hey, after you made your profits, take some of the money and put it into something that's a dividend driven type of play, like your McDonald's, or I'm trying to think of a couple more. Apple doesn't really pay that much, but you want to get into those dividend safer plays like Coca-Cola, for example, or Pepsi that pays the dividends. It doesn't move drastically, but as the economy inflation grows, their prices will grow, but they pay out solid dividends that you should be able to get some money on. Those are investing type of tactics. So I'm gonna give you a quote from David Goggins, and like these people, these investors, they look at all the swing traders and they look at all the scalpers, and they be like, "You don't know me, son. I'm gonna hold on. I got diamonds. I'm gonna hold on to this," because they, you know what I'm saying, they don't care what is happening. They don't care what's happening in the news. They're looking at a very broad aspect of the market. And if you are a very patient, methodical type of person, and you could be able to strategically put yourself in the right position, an investor's side of a trader's mindset might be good for you, because it allows you to look at a larger time horizon, especially if you're like in your mid 20s to maybe your 40s. You could kind of get into that realm. It's very useful. And if you want to add into some dividend plays, some safer plays above the age of 40 and going into retirement age, it could really pay a nice little pretty penny off of the dividends itself. So those are the mindset of the investor. Let's go ahead and get into the next one. The trader mindset of a swing trader, right? Swing trader, they can overcome distraction, minor price movements, and market noise. Because there's some knee-jerk reaction. I'll give you an example. Like, for example, when Uber CEO got caught up in that whole entire controversy, or whatever the case may be, there's knee-jerk reaction in the space. That's what the market does. They take little short spurts of things, and they want that price action because they're anticipating that those that don't want to invest into that company, they're going to go ahead and sell it high so that way they can buy it low later, and then allow the investors to come back and buy the dip, and they're selling it to those investors. That's kind of like what the swing traders are doing, right? So I'm sorry, the scalpers are doing. But on the swing traders' perspective, that type of noise doesn't bother them, because based on their trading plan, they're looking at on the possibility, okay, you know what? This is an opportunity for me to average down or add more or put myself in a better position, because I know there's a longer term side where it could be 1 month, 1 week, 3 weeks, 2 weeks, or whatever the case may be. They already know that this structure is in place. As long as it doesn't break their current trend line that is supporting it, they should be perfectly fine. They operate totally different than what an investor, but there's some similarities there. So they have a very, very, very importance on having a solid strategy. Unlike investors, I feel like you have a little bit more wiggle room because there's a time aspect to it. So you can invest into something, and then 4 or 5 years later, inflation goes up. Guess what? The price of that particular ticker probably went up as they keep up with it, and it allows for you to be able to be in that position. But a swing trader, they don't have that luxury, depending on what type of opportunities that they take. It could be between shares or options, and how much their time horizon is there. So I want you to look at this quote from Myron Golden. Don't let small thinking cut your profits. Don't let the scalpers, if this is the type of person you are, you're a swing trader, do not let the scalpers' words and they're minor, and this is where you major in the minor things, right? You don't let those minor noises come into your trading plan unless it breaks your strategy and not the noise that's going on with the scalpers. All right. So they keep their emotions in check. They maintain their focus. They look at things in a big picture, not as big as investors, but they look in the big pictures from a perspective as a swing trader based on their time horizon. All right. So let's go to the next slide. So now the scalpers, they're always running. They're always moving. They're always moving and shaking. Like these are the type of people that they're taking opportunities. They're moving the market in one direction because they're taking the wave with it. Right. There's a little bit of a flaw here. Unlike investors and swing traders, swing traders, you could kind of fall into this category too. But there is a point where you can fall, and it's a deep fall into over trading, because the opportunities as scalpers, we can make what swing traders make over time in seconds, minutes, maybe in an hour. So there's opportunities in that aspect in itself. But the flaw behind that is any movement against those knee-jerk reactions. Maybe, like I said, the example of the CEO from Uber, that conversation probably comes through the news feeds, and it affects our position if we were looking to hold on to it for like 15, 30 minutes. that can negative effect. I was talking on the floor today as Jay Powell was coming in. I'm a scalper. Most of my floor is scalpers. They're scalpers to day swingers, right? So when we were coming up to about 145, the first thing I did is gave them a warning. There's a couple things that's coming up. Make sure you understand the market climate so that way they can be protected in the event that this goes adversely to their position. I don't care if you're in profit. And I think the words exactly I said, I don't care if you're in profit. You may want to consider start taking some money off the table. Whatever you're willing to risk is up to you, because that's our type of business. That's the mind of a scalper, is that we're in here for a good time, not a super long time like the swing traders, not like the investors. We're looking for the opportunity for this to be able to take the position because there's someone like a hedge fund or investor or a swing trader that's looking to buy it at that price, and we make the profit in between. All right, so this one is probably the most important thing for a scalper, because just like we can make a couple hundred, couple thousand in seconds, is the same way we can lose a couple thousand, a couple hundred in seconds as well. So there's an importance to have a clear, quick executing strategy that's designed for scalpers. There is no way we can take our strategy as a swing trade, as a scalper, and apply it to a swing trader and vice versa. So it's very important that you do that. Also, maintaining discipline. You can kind of break discipline on swing trading because you have time. There's a time horizon there. No, we have no time. Like whatever our strategy is based on the time that we actually are charting on. So if this is the type of mindset that you have, it's very important you don't get carried away by the temporary fluctuations, because you got to get your discipline. If you actually execute it based on your discipline, the market fluctuation should be on your side, not against you. So from a scalper's mindset, it's very important that you hone in on that side. Let's go ahead and get into my favorite part, right? I don't care if you're a scalper. I don't care if you're an investor. I don't care if you're a swing trader, right? There's a very big importance on focus, right? So like I said, you want to try to minimize the minor things. Jim Rohn's quote is, don't major in the minor things. If there's somebody that's giving you a minor phone call, minor conversation, they're talking about, hey, you know, I just realized that this basketball team just went ahead and took on to, who cares? Between 9 to 4, I'm a trader. You're interrupting me. I put my phone on silent. The only person that can reach out to me is emergency family, the school, and stuff like that. Other than that, you're not major. You're not the ones that's going to interrupt my opportunity to be able to look at the market very objectively. And you're not going to sway me with any negativity or positivity that can go ahead and bring me away from zero. Because in the market, you have to get to zero. So as a swing trader, same thing. If you're about to get into your position and you need to make sure that you get the best price possible, and your entry is based on the 1 hour, that thing can switch in that 1 hour. So if you took like 3 hours away from the market, it's coming close to your setup and you don't have no alerts, that's losing your focus. So there's a very, very important aspect of focus. Market climate, like today with the FOMC minutes, with the Fed decision, and we're going to have JOLTS reports, we're going to have non-farm payrolls, we're going to have a lot of stuff. If you're not focused, I promise you, the market will take your money. So I want you to eliminate as much distractions as possible. I know it's almost impossible. We're human. We have things. We got, we have responsibilities, everything else. But the goal is you want to eliminate distractions. To paraphrase one of my predecessors, if somebody's coming to distract me, I'm going to go ahead and shut everything down and focus on that, because I cannot focus on two things at the same time. Because I'll tell you this, the market is a moving machine. It's a well-oiled machine, and it's up to you if you're going to go ahead and get it in the right positions. All right. So eliminate distractions and minor tasks that does not contribute to trading. You should have already knocked that out before you have to. If you are trading from 9 to 4, you should already knock it out. If you're not trading 9 to 4 and you're only trading 9 to 11, all right, guess what? After 11, I can handle this minor distraction or minor success. That's what those times are for. And that's why I want y'all to kind of like really place your energy and build a schedule. I know I'm probably, take a little piece of my own advice because I got to work on that schedule, but I think that's where we're going to be focusing on a lot, because as traders, we misplace our energy really, really fast. And as a scalper, I can be distracted quickly. Let me go ahead and give you another quote. This is from Myron Golden. you are not paid by the hour that you're in the market. You are paid by the value you bring. That's every trader. If we were paid by the hour, I would be rich right now. Everybody knows how my trading floor operates or whatever. If I don't execute in the market, I don't get paid. So it's about the value. And when you can value your time and place your energy properly and put your setup where you need to and have a proper strategy, a proper plan, guess what? You'll find that value. It's the byproduct. The money is the byproduct of all the investment that you made into yourself to be a better person as a trader. And the market will show you that mirror. If you're very unorganized, if you don't even know where your tickers is, if you tend to log in, you know you're supposed to trade at 9:30, but you're logging in at 9:29, the market will show you how unprepared you are. That's the perfect example to that. All right. So I want you to understand the importance of focus. So as usual, I'm going to leave you with this. If you haven't seen it before, that way you can see it. Practical tools for mindfulness in the trading, self-awareness, and emotional check-ins. Gotta have it. That's why we have this reset at 0. This is an emotional check-in. Journaling and reflective analysis. You cannot know where you're going if you don't know where you came from. I don't care what part of life you are, trader, real life. If you were living in a certain area and you move from another area, you won't appreciate what you have unless you know where you came from. So the same thing with trading. You got to know where you came from. And if you don't journal, you won't know what you need to fix. All right, setting boundaries and limits. I talked about this before. If you set your limits, you start to go ahead and get some consistency because you can stop yourself when things are not going your way. Educate on market climates. Market climates is very, very important. Today was a perfect example of that market climate being effective. Scenario planning. This is breaking down the schedule your plan, getting everything in place. Diversification, portfolio rebalancing. You got to take care of yourself. If you made some good money today, and I always do this call to action, take some of that money. I don't care if it's 10% or 25%. That's up to you. You make the decision, but get yourself something nice. Go take yourself to dinner. Even if it was $8 so that way you can pay for a ticket in the movies. Hold on. Is it really $8 for movies? I don't even know. I might be showing my age right now. But treat yourself. Yes, thank you. You got to treat yourself because it starts to turn into a chore, and then now you're going to hate it, and then now you're not objective to the market, and it will take advantage of you. And then the last one is mindfulness and meditation. I'm a God-fearing man. If you want to pray, you can put that into that. But mindfulness and meditation, be one with yourself. That way you can reset completely back to 0. All right? So I'm going to leave that on conclusion. We're going to go ahead and get ourselves focused. We're going to get ourselves back to 0. We're going to go into the market tomorrow, and we're going to be very objective because we're going to already know our trader's identity and we know what we need to fix. All right. So I'm going to leave the door open for anyone that wants to go ahead and say any comments, any questions. Anything you got? Maybe you made $1.5 million.
Thank you, Jeff.
Yeah, go ahead.
No, I just said thank you.
Oh, you're very welcome. You're very welcome. Like I said, I didn't take mindset serious when I first started trading, and I have a portfolio that proves it. So I had to turn around and fix that up. So mindset really, really helps. All right. Anyone else? Comments, questions?
You know what? I'll share because
Okay.
I rounded a corner or turned a corner in my trading.
All right. Let's get it.
No. I'm saying no. I mean, I turned a corner, which means I can't see the other corner anymore. I don't know what street I was walking down
Is
before
that deep in the
because
rear view?
yeah, but it's a beautiful thing because I had justified using indicators only to play. And the week before, I may have shared some of this before, but the week before the war, Israel and Hamas broke out, my indicators got a little janky. I couldn't figure things out. And then I fell asleep on a trade. I'll tell that story another year. Um, but then the following week, indicators just didn't work at all.
Okay.
And nothing was clear. And I stopped and I took a breath and was like, Christy, you do not know how to trade. When I broke my own heart,
You
but
kind
those
of break it
were
up a
true.
little bit.
Relying on that. Okay,
You're in a
what
bad
about
area.
now?
Yeah, that's a lot better. Go ahead.
Okay, I was walking, so I'll just stop moving. Can you hear me?
Yes, I can hear you.
Okay. Yeah, I just realized I didn't know how to trade. I didn't rely.
It looked like her call just dropped. I do not see her on the call.
Nobody won't tell the story. I'm gonna wait till I'm on the internet and tell them for that.
Okay, no problem. No problem. All right. While she's trying to figure that out, anyone else wants to chime in? Remember, it does help a lot, and then we'll leave this open for like another 5 minutes. Even if you did great, like I had a great day today. I'll share. Today, as I was doing one of my evals, I think I was down earlier this week, like $300 or whatever the case may be. And today I went in with the mindset, okay, you know what? Whatever happened yesterday has nothing to do with anything. So let's just go ahead and get our setup and let's just get the baseline done. And when I took the trade just took off. It was a little before the FOMC minutes, and I was able to generate about 180 ticks. Oh, okay. She says her mic's all right. So go ahead, Christy. Let's see. Let's give it a try.
No, keep telling.
Oh, okay. So yeah, so I generate like 180 ticks, and I was like, okay, cool. And then when it kind of pulled back or whatever, I went ahead and got to my goal for the day, and I made sure I logged out of my account, made sure that I had everything that I needed to do, and yeah, I had a really really good day. All right,
That's
Christy. So
awesome.
yeah,
That's how you do it, Jeffrey.
it was fun.
Not being an anti-indicator no more, huh?
Well, well, it's a little mix of that because I was deep into price action. My entry was so sharp because I was actually doing it off the price action itself, but I already
Yeah.
knew what my indicators was telling me from the higher time frames.
Nice. Way to go. Your whole face looks different. You're glowing in the dark, bro.
Thank you, thank you.
That's really good. Yeah, I think the bottom line for me is I realized I couldn't trade. I just couldn't trade. Following indicators only. If the indicator breaks, I'm in trouble.
Yeah,
And so I had to just come to price action, period.
yeah.
And it really wasn't as difficult as I was making it out to be. I had this block in my brain that it's mathy and it's this and that. No, it's still patterns.
Hmm.
It's still rules. You know, now I'm following rules. I did close to 200 ticks on purpose today. I'm keeping myself on paper
Yeah.
until I feel very confident, and then I'm going back to my funded. But it might be November 15th before I even attempt it again.
No,
But
and
Christmas is yeah,
that's okay because you got to put the boundaries. That's one of the things as far as mindful trading, right? We got
yep,
to know when we need to set boundaries so that way it can be able to be objective in the market. So I think that's a good date, November 15th.
something like that. It'll be at least this week. That's all I know.
All right,
But I'm
all right.
crying in my car until I just took a deep breath. I felt like Neo was on my back. And I was like, no, this is all you, Christy. This is all you. And get it together. And the moment I made that decision, it's like the charts cleared up. And
Yeah.
what I can see now.
No, that's great. And like you said, there's like it's different energy when you start to get deeper into your trader's identity. And I think that's where a lot of us are is just developing that trader identity. that's when everything starts to click. And you can see, like, we've had some people talk, especially when we did Stonks After Dark a little bit, right? There's some people that I haven't seen in a long time, but they've already found their traded identity. They've made their money between hundreds of thousands or millions, whatever it is that they're working with, but they bought their freedom through the trading. But you can hear a certain tone that comes from them, and a certain energy. And sometimes it could be defeated because the market did something crazy. I know, right? We need to bring back stonks. I agree. I agree. But you start to like really see that. So today was a really good day because it not like what you just said. I went ahead and got 140 ticks on purpose. It's not like I haven't had 140 ticks. It's not like I'd never done it before. I think the most I've ever taken was like 425 ticks. That was the most I've ever did. And it over multiple trades, not just in one trade. But it's one of those things, like, now I felt like, okay, I'm being intentional. Maybe that's the word I'm going to go with. Not
Yeah.
like but it was so intentional. Like, oh yeah, you do this, it's gonna have. I'm telling you, I'm gonna put my stop loss right here. You're not going to get me. And then
Yep.
as soon as that trade executed and it gave me what I was looking for, the strategy just went into place.
Yep.
And now I'm just managing the trade. And for the first time, I actually managed it where I wasn't like, okay, let me put it in profit quick. And I've been
Yeah.
trying to work that out, going from scalper to that quasi day swing.
Yeah, because you want to catch the trends. Like,
Mhm.
and I just have given up on trying to trade all the way around the clock. Now it's like
Yeah.
I'm waiting for my Asian high and low. I'm
Mhm.
waiting for my previous day's high and low. I'm setting my levels. I'm looking from the daily down. And sometimes I play from the hourly to the 15-minute. I don't even bother with the 1 minute anymore because, well,
Okay.
I might, but it's not always necessary the way that it was before. And I'm not getting shaken out.
Yeah.
It's just, yeah, it's a good place to be. Here we go, Jeffrey.
And we've talked about it. We're like, listen, get out of the 1 minute chart. It was just there for entry. Step up. Go look at the 5. Go look at the 15. And it's easier said than done because we're trying to maintain so much, I guess, as scalpers. And we had to have that come to Jesus moment. Like, listen, you just can't do that. Like relax. Nah, I appreciate you, Christy. And I thank you for sharing. All right. Anyone else? All right. I'll tell you, it makes you feel so much better. You get it out your chest. It feels like you just take the weight off your shoulders and just toss it to the side. But if you don't want to share, that's okay. All right, we're going to go ahead and end it here. My next class, or actually my next event, is the 8 a.m. trading floor. By all means, I want to see y'all there. If you are trading futures, I do some recaps on some stocks if you do ask me the question. Also, I am going to be working on some events. If you haven't subscribed to my YouTube and you haven't followed me on Instagram, that's how you're going to know when they're going to be coming out. And I'm going to try to come out with some giveaways too. So that's going to be coming out too. So I appreciate everyone that chimed in today for Mindset. Also, Infinite Ignition. If you haven't watched Infinite Ignition, it's in my YouTube channel. Really, really good video. And it brings that fire back if you really feel down on yourself of trading. All right. So on that note, thank you, everyone. You have a great night, and I will see you tomorrow. Later, y'all.